Hello, today I want to talk about how a portfolio of 3 ETF is responsible for most of my wealth. So I don't. Most of you don't know me, and some of you have been following me for a long time. And I had to tell you, if you don't know me, that I was a day trader for almost 10 years. So how I went is that I used to go wake up early, check out the European markets, check out the news, do an immense amount of reading every day, and then as soon as the market open, I will start trading. I will buy and sell and speculate, guess, or many of the decisions were informed. Whatever method I was using, yeah, I was involved in it for almost 10 years. And to be honest, I had some very good weeks, some very good months, and I felt at times that I was in a row, having going after one success after the other one, and then all of a sudden I would have a hugely bad day. Something catastrophic will happen, and all my gains of the last week or the last month or the last 3 months will evaporate. And after 10 years, I noticed that I wasn't doing as well as the index. Sometimes I was beating it, and most of the time I was not. But overall, my gains didn't justify the time and energy and effort and the sweat and tears that I was putting into that. And I just got fed up with all the lifestyle and all the stress that I was living for the small amount of returns that I was receiving, and I decided to follow John Bogle's strategy. Now, for those of you who don't know who John Bogle is, he was practically the creator of index fund and later on ETF. And so his creation has revolutionized the stock market, has revolutionized the opportunities available for small investors like me. So yeah, there is a small video here. There is a link for a video for you to check out. His life is just amazing in regards to investing. He was truly a visionary. He knew that his investment would change the history of investments for all of us little guys. And so as I decided to stop speculating, to stop day trading, I was then looking for a strategy for my investment. Now I had to let you know that I'm from Canada. I live in Canada. I'm from Colombia, but I am a Canadian citizen, and my strategy is Canadian centric. Okay, so that means that I have a significant part of my portfolio based in Canada. If you are watching this from the United States, I would suggest something for you as well. But I would like to share my portfolio, the things that I have. So this is my portfolio. This is a pie chart, and this is 30% VFV. This one, Vanguard Standard & Poor's 500, is as many of you know, represents the U.S. economy, the 500 biggest corporations in the United States. So that's about 1/3 of my portfolio. Actually, it's 30%. Okay. Then after that, I have this XIU, which is iShares Standard & Poor's 500 Toronto Stock Exchange 60 index. So that's a mouthful, but actually what it does is that this represents the 60 biggest corporation in the Toronto Stock Exchange. And then my next investment is this one, VIU, which is Financial Times Stock Exchange, developed all caps except North America. So this index was put together by the Financial Times in London, and it represents all the big corporations in the world except the ones in North America. So in that way, I feel completely diversified. I feel like I have 30% in Canadian stocks, 30% in US stock, and 30% internationally. Now this other part is about 10% of individual stocks. Yes, I still fall victims of the speculation, the news, the noise, blah blah blah. I feel like I'm getting a huge opportunity, or that I'm missing out, and I still invest in individual stocks. And it's just to my disadvantage, because this 10% portfolio constantly underperform any of my other portfolios. So that's my punishment for continued dabbling into individual stocks, and I hope you will not do it. Now, I mentioned that if you are from the United States, maybe you could do something else. Well, maybe you could just focus on the Vanguard 500 and in this FTSX for not for international companies. I'm sure if you are in the States, there's something similar to that. Vanguard, I'm sure Vanguard offers it, and you can look for the equivalent of that. So now I just like to go a little bit in detail of why this particular index fund. Well, first of all, I feel completely diversified globally, but the returns are amazing. So I'm just going to give you an example. Well, I'm not going to give you an example about this because this is my individual stocks. They are horrible, but let me go into this one, the international. Okay, so now well, that's not where I wanted to go. I'm going to go, I'm going to go into this one first. Okay, so here now this is the Vanguard S&P 500. This is in Canadian dollars. Now, one of the amazing things is this. This is called management expense ratio. Okay, and it means the fees, the expense that it takes to manage this portfolio. So notice this is 0.09%. That means that out of $10,000, the management fee is $9. So this is amazing. $9 to control $10,000. So okay, now what else is amazing here? Let's go and see. Let's see the returns. Okay, let's see them annually. So look at this. This is just incredible. Total returns by market price. Okay, now look at this. 2013, 40%. I mean, this is crazy. 2014, almost 24%. 2015, 20%. 2016, 8%. 2017, 13%. 2018, this is the time that the market collapsed, blah blah blah. That still it was positive, 2.80%. And then comes 2019, 25%. 2020, 15%. 2021, this was a great year for me, 27%, so on and so forth. So these are incredible results. And 2021, of course, I'm not going to miss that. It was a negative year. But look at this ratio out of the, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Out of 10 years, only one was negative. So, and the positive one, they have explosive growth. And so this is amazing. This is one of the reasons why I strongly suggest passive investment. I didn't have to do any stock analysis in order to gain this 40% for this year, and it's just there for me without spending any more than 5 minutes just shifting, rebalancing my portfolio at the end of the year. Okay, so there was the other one that I think I made a mistake in the in my website. It was, what is it, VIU. Okay, so let's look for it over here. VIU, where's my, okay, here, VIU, Vanguard Financial. Let's see if it says what it is. Okay, it's Financial Times Stock Exchange. Okay, so let's check it out. Now here the management expense ratio is a little bit higher. These are European stocks mostly, so it's $23 for every $10,000. I think it's still very affordable. And let's check out the returns. I'm sure it's not as amazing as the Standard and Poor's 500, but it's good. It's still respectable. -2 plus 19, that's quite good. -7 plus 15, what is it? Plus 7 plus 9 and -10. So it's not great, but it's not bad. And then the last one is the Toronto Stock Exchange. And let's check. This is, by the way, this is by other company. This is no Vanguard. This is by a company called BlackRock, which is the Vanguard's main competitors. And here I want to show you what's the expense. How much is this costing me? So here is management expense ratio, 0.18%. So $18 for every $10,000. So that is great. And let's see, I think they report here the returns in a different way. Okay, so here they are. The last year was negative, but in the last 3 years 17%. This is quite good. 5 years 9%, 10 years 8%. I have people who are in the real estate business and they don't make this kind of return, and they have to put up with bad tenants, with taxes, with regulations, with zoning laws. And here I just put this into the index and I just collect money after, I just see my money growing without having to worry about anything. So that's it. This is my portfolio. This portfolio is making me rich. It's growing month after month, and I'm not doing anything special. I'm just putting my money in all these 3 funds mostly, and just watching my money grow. So what you do is your own business, and just sharing with you what I do, and whether you decide to follow my technique or not is completely up to you. I'm just sharing the information that I have and that I use for my own portfolio. Thank you so much for watching, and talk to you next time. Goodbye.